Hello guys, welcome to my YouTube channel. Welcome to another video I'm gonna be making for you guys today. And first thing first, I hope you guys like the previous videos I made on support and resistance. And today we're gonna be talking on trend line. All right, we're gonna be talking on trend line. First and foremost, as you all guys know, like and subscribe so you can keep on getting my channel, my videos that I'm gonna be making. And subscribing is going to do a very good work to this channel. I'm going to push the channel out to a lot of struggling and learning traders out there worldwide, internationally, we hope. So guys, just like and subscribe. It's not a difficult task. It might not be very relevant to you, but it's relevant to me and the channel. All right, so like and subscribe, and thank you as you do that very much. Okay guys, let's go to the video. Today's video is going to be on trend line. So first of all, we're going to be using the S&P 500 weekly time frame. It's just about trend lines though. Trend line is not really a difficult concept. It is just what it is, trend line. It is what it meant, trend line. So let me just put it right there. I thought you guys would like to write trend line, trend, wait a minute. Yep, so trend line. So that's what we're going to be talking about today, trend line. It's a simple concept. So first of all, what is trend line? Trend line, my definition of trend line is a form of support and resistance, but it's a diagonal support and resistance. Yes, it's a diagonal support and resistance. So what that means is that it is not like the traditional support and resistance whereby it's horizontal. All right, this one is diagonal. It's usually slanty. It's not like a normal support and resistance. All right, so guys, first rule, it's the price action criteria about trend line. So first rule about trend line is that first the market must be in a trend. All right, first rule, let me write it out here. Rules of trend line. Rules of a trend line, or criteria, anyone you want to call it. Trend line. Rules of a trend line. So first rule is that the trend line, it must be in a trend. It must be in trend. It must be in a trend. The chart must be in a trend. The chart must be in a trend. That is the first rule there. The chart must be in a trend. It must be of a trend. All right, it must be of a trend. You cannot be trending. You can't just put it in a ranging market. It must be of a trending market. I think first of all, I should first of all tell you the types of market first of all before going to trend line. Yes, I think that's what I'll do first. Let me tell you types of market. So guys, there are two types of markets. Two types of markets. There are two types of markets. I just short from there. That's already two types of markets. And the first one is a trending market, as you know. Trending market. Two is ranging market, and then three is choppy market. This is not what we're going to be talking about. This is not what we're going to be talking about, but just for the sake of this trend line concept. So these are the types of market they have. All right, these are the types of market. This is the heading. These are the types of market they have. So there's trending market, ranging market, and choppy market. So we don't want to be drawing a trend line in a choppy market. All right. Example of a choppy market. Let me show you anyway. There is none now, but later on in the videos, and I'll probably make that point out. Okay, let's say this area here. It's kind of like a choppy market. This area here. kind of like a choppy market. You see that it's not really doing anything there. You don't really see clearly on the higher time because it's high, but you go down to the 4 hour, you see that here was just a choppy area. So first of all, is the trending market. So trend lines are used only in trending market. So the first rule is in trending market. So now what do you see and what makes the trending market? The trending market is made up of the market that has the ability to keep making higher highs and higher lows in terms of an uptrend, and lower lows lower lows and lower highs in terms of a downtrend. Right? So let me just draw it for you. So this is a bullish market. It's making higher highs and higher lows. All right, let me type it here. So this is this area there is a higher high, that's a higher high. This is a higher low, and then we're just gonna clone it. This is another higher high, and this is another clone. This is another lower low. All right, so that is the ability for this an uptrend market. Let me put it there. Uptrend market. Uptrend market. I don't want this video to be long. Trend line is just easy concept though. So this is an uptrend market, and then this is a downtrend market. And its ability to make lower highs and lower lows. Alright, so this is a lower high and this is a lower low. This is a lower low. And I'm just going to multiply this clone. Lower low, clone, and lower high. All right, so you see that that's the criteria for a downtrend. All right, so let me just put it out there again. Downtrend. All right, that's the criteria of the downtrend market. So this is one thing about trend line. First, an uptrend is makes up of higher highs and higher lows, and downtrend is lower lows and lower highs. All right, I think these concepts are very easy. So let's move over to this. Let's try and see if we could draw one. So you can see this is an uptrend. You can see its ability to make higher highs and higher lows. All right, so you can see it simple here. See it here. This is a higher high. This is a higher low. This is another higher high. This was another lower low. So you can see that this is an uptrend. So let's draw it. So a trend line is from, so the criteria is that you draw it from two, in the case of an uptrend, you draw it from two higher lows. You draw a trend line at least. This is the second rule about a trend line. This is another second rule, is that they must be, number two, they must be at least two lows. In the case of an uptrend, must have at least two lows, at least two lows, 2 to 3 anyway, at least two lows, lower highs, but there must be at least two lows in the case of an uptrend. At least two lows. All right, so that's the second one. At least there must two lows in the case of an uptrend. This is in the case of an uptrend. I think I need to write it down. I don't know, I feel like you guys will really understand. At least two lows. I think I'll put it in the bracket. In the case of an uptrend. In the case of an uptrend. At least two lows in the case of an uptrend. So let's draw it right. You see, first touch is the first touch and the second touch. Let me make this thing a little bit thicker So you can see first touch and second touch. All right, see that easy peasy. See that easy peasy. First, second, and then on the third touch, confirm the trend line. So trend line is just basic concept for taking trades. So you just want to know what the trend is like, and based on the trend, we take serious price action. So in this case right now, this is an uptrend in the US 500 as the S&P 500. So higher highs, higher lows, higher high, higher lows. All right, it's easy. Trend lines are not really very difficult concepts. It's just used to define the trend. So then what we want to, how we take trades based on this is we wait for another touch, because the belief is that the market get there to make another touch. The belief is that if the market get there to make another touch, it's going to bounce off again, just like it bounced off the first and the second touch. So that's the belief about the trend lines. All right, so now the idea is that when market gets here, it's going to bounce off again. In this case, there's nothing that's actually 100% in trading. So in this case, it didn't bounce off. But you go to the lower time frame, I bet you very well. Let's go to, like, you see that it bounced off here. You could take advantage of it on the lower time frame. Let's look at it on the 1 hour now. I tell you that it's going to bounce off. You see a bounce on the third touch. Now, if I tell you guys that this is a third touch, will you believe me? Let's see. So where is the first one? So this was the first touch there. This was the second touch, and then see, this was the third touch. Let's just adjust it a little bit. Right? See, that was the third touch, and it bounced off. So on the lower time frame, you would have capitalized on this move. We can see that. You can see there's also trend lines inside of another trend. That's another thing I need to point out for you guys. A trend line can be in another trend. It can be a trend in a trend, right? That's the thing about trend lines. It can be a trend. It can be an inside trend inside a trend. I don't know if that makes sense for you guys. It can be a trend inside a trend. All right. So that is it for about the trend lines. It's not really a difficult concept. I don't know if I'm missing out anything here. So first thing is that there are types of market. There's trending market, there's ranging market, there's choppy. And you want to be using trend lines in a trending market. All right. So that means a market that is making higher highs and higher lows, or in the case of a downtrend, which is also, or in the case of a downtrend, that is making lower lows and lower highs. All right. Higher highs and higher lows is focusing on an uptrend. In this case, this is an uptrend, and lower lows and lower highs in the case of a downtrend. All right. So it's really an easy concept. There's really nothing difficult about trend lines. And another thing I want to note is that they can be a trend inside another trend. And that the idea of a trend line is that when market gets to the trend line, there is going to be a bounce off, and then we want to capitalize on that bounce. All right. You can see another trend line here. All right. So you see that first, second, third touch, market goes down. All right. Another thing I want to tell you guys is that usually the third touch of a trend line does the trick. All right. The third touch does the trick. So you want to see, you want to be really observant. You find out that whenever market touches the trend line the third time, that's where the massive move usually happens. You notice that. Check out, just do your back testing. You see that when market does the third touch, that's where the trick lies very well. So guys, it's very easy. I'll refer you guys to probably BB Pips. There's a lot of information on BB Pips about trend line, and that will be very probably profitable for you guys to learn from BB Pips, because it's actually a simple concept. BB Pips just breaks it down for you very well. I've broken down anyway. It's not really nothing difficult about trend lines, but in case you want more information than I have explained for you, you can go to BB Pips and you see that very well. So trend lines is a very easy concept. There's nothing really difficult about trend lines, and yeah, and they can be applied in any time frame. We go, as you see, we went out to the 1 hour, and you can still see it in the 1 hour. Let's check out some trend lines in the 1 hour. Let's see if we see some. Yeah, okay, clearly S&P 500 actually have been trending very well. Okay, so let's draw a trend line, small one. See that? So now you guys might be asking, how do you dread? Do you dread from the? Some of you might be asking, maybe seeing people say dread from the wick of the candle, or is it from the body of the candle? The idea is just anyone. All right, just make sure that if you're starting from the body, the rest should be the body. All right, if you're starting from the wick, the rest should be the wick. It's all about confluences. All right, the more touches you can get is how more valid that trend line can be. That's just the idea. The more touches you can get, the more valid that trend line will be. So the idea is whether the body, the wick, doesn't really matter. The idea is the idea is about the confluence. All right, it's about the confluence. You want to get more confluences. So whether you're using the body, use the body throughout the rest of the touches. If you use the wick, make sure it's about all about others are about the wicks. All right. So guys, that is it, and there's really nothing much to explain. So you can see that it is valid even on the lower time frames, not only on the higher time frames. All right. You can see another trend. You can see this just a lot of trends. All right. There's a lot of trends. So that is it about trend lines. And also, I want to point out for you guys is that there's a concept called inner trend lines. All right. So in a trend, there could be another trend inside the trend. I think that one is mostly found in the lower time frame. Let me show you on the 30 minute, for example. Let me show you. So let's look for a clear trend line, or let's just use the 4 hour. Let's use the 4 hour. Okay. So now we could see yep, yep. So we could see there's a trend line way about here. You can see an uptrend right in this area. Now let me get rid of this first of all. You can see this trend line here. So if you go down to that 15 minute right down now, that same place now, you still see another trend line in that same place. Let me zoom this in out. Okay, see it here now. You will still be able to see another trend line. It's not displaying here. Let me see. Okay, we could still see another trend line here now. Have you seen that? Have you seen that? You still see another trend line, so we could still be hoping for market to get here and move. So it's an uptrend, but inside that uptrend, we still see another uptrend, get another trend line. So that's the concept I want to point out for you guys. It's very an easy concept. It's really nothing difficult, and yeah, that's it. So guys, trend lines are really not difficult concept. I hope you guys like the video. Subscribe. It's easy peasy. It's nothing really much about it. Keep on liking my videos. It's going to be helpful for the channel and also be helpful for you guys. And I believe I've explained this thing to the best of my knowledge. I bet you trend lines are not really to be your problems at all in trading. All right, trendline strategy, it's a very simple strategy. It's just about looking for a trending market and applying trend lines. All right, now there are other like indicators, or you can use like the moving average. They are very good for trend lines. People use them a lot. You can also VIA also use them. But yeah, it is what it is, and there's nothing really much. So guys, thank you very much. Like and subscribe my videos, and see you every week. I remember I told you guys I'm going to be posting every week my trends, my videos every week, and for the past 2 weeks I've been doing that. So guys, like and subscribe to my channel, and thank you and peace out.